Portfolio Builder members, welcome to the Whale Club update. This is a portfolio that's ideal for millionaires, and the reason why is multiple. The first is that the big plan is to jump into companies like Google and Amazon with in-the-money covered calls during periods of high volatility. So I'm talking events where the VIX has shot up over 40 and will represent most likely a 20 to 50% crash in equities. In the meanwhile, we're playing it safe and holding on to the safe haven asset of U.S. Treasuries. But rather than pulling in a boring 2.5% return, we're actually taking advantage of the options market. So we're buying the TLT in multiples of 100 and then selling the covered call. And there's a lot of people betting that rates will go all the way to zero and then some. And that would push the TLT much higher, which means there's stock speculators who want to buy call options on the TLT. Now, the yield we make on the TLT is much less than the SPY, and there aren't 3 options a week like there are for the SPY. So that's the downside. There's also less volume flowing through the TLT ETF because it's a lot less exciting and there's a lot less movement. But when we're in the game of writing covered calls, it's absolutely beautiful. And so just to review today's trade, today we buy to close the 126.50 call option for 4 cents per share. And so that is a 86% return on this covered call. And today we're going to jump into the exact same strike price for a very similar premium 27 cents. So for every 100 shares of the TLT you own, you can sell 1 covered call. If we do take a look at the option market, there's a little bit of trading volume happening today, not a whole lot. There's a lot of support at the 125, 124.50 in terms of open interest on the put option market, and there's a lot of resistance at the 126 level because so many people will have to sell their shares at this 126 price. So I think we're pretty range bound from here while we see how this trade war develops. So if I go back to the track record, you can see our history of trades right here. We've now inserted the new trade. And so now we wait for a few things to happen. One, I do believe that the trade war will not be resolved in any meaningful way anytime soon. And I believe this will push the Fed to slightly lower rates, which should push TLT much higher. Also, with the trade war conflicts, this should also hurt countries like Germany, which are already in big trouble, and I believe will continue to push the entire world towards a longer period of lower rates, which will signal to the stock market that there is trouble ahead. So I believe that we will continue to see the TLT act as a safe haven rescue, which might seem hard to believe. Now we're looking at our basic portfolio as the SPY continues to be resilient. Our current trade alert in the basic program, I'll do a quick review. We have the maximum profit, and now we're sitting on an $8 cushion on our trade alert from Wednesday, so do nothing. The worst thing that can happen is we get assigned, we get that $69 baked into the cake profit, and we'll be back into cash Friday to do it all over again. If the market starts to get nasty and pull back between now and Friday, we're protected all the way down to $280, so that's $8 away. Very little chance we go below that, and even if we did, we'll just sell that covered call for a huge profit and write a new one to make up the difference. We are going to start including our cryptocurrency technology simplified in the basic program. This is a portfolio that can be completely purchased at Robinhood, which is really nice. And at the bottom of each email, we do have a link to their platform. It's a phone app. It's commission free. They're valued at $5 billion. They're the fastest growing brokerage in the world. They also have free commissions on option writing, option assignment, and stock trading. So it's actually the best place to follow our strategies because we're in the business of making tiny returns with very, very high probabilities and lots of safety over and over and over again. So there's no point in giving your profits to a broker. This product is super easy to follow. You don't need a big help desk that's going to charge you $10 a ticket. these guys will pay for your commissions for free. And what's more is they insure your capital up to $500,000. So when you're in the world of Bitcoin, you don't want to lose your coins and have them stolen. You don't want to have to learn all kinds of advanced security strategies. So our recommendation is to just follow this portfolio. We will be issuing out new spreadsheets to everyone alongside new tutorials tomorrow. So you'll have access to this crypto portfolio. And it's very simple, buy and hold. Our recommendation at this point is to have no more than 5% of your assets into cryptocurrencies. And the main reason we do like cryptocurrencies and have been touting them as a good investment all year is because of the threat of the Chinese devaluing their currency, which they are now doing. And the rich Chinese who don't want to see the value of their assets drop 10 to 25% during this trade war tariff escalation have been buying up cryptocurrencies like crazy. So this portfolio, relative to our basic portfolio of $500,000, is at the point where it needs to take some profits. So we will very soon take some profits off the table, but not until I see some sort of resolution or until we see the currency pair of the dollar versus the CNY get closer to 7, where I think it'll probably slow down. And that's when we'll most likely take a lot of profit off the table on this and start a wait and hold position on the crypto. Currently it is up 75% and holds 50% in Bitcoin, 29% in Ethereum, 12% at Litecoin, 7% in Bitcoin Cash. Coins we will add in the future currently, but not available at Robinhood, include Monero, Tron, Ripple, and EOS. Plus we have a spot to short Bitcoin when things get into a mania state for Bitcoin. And it's close, but I don't think it's quite there. If we now go take a quick look at our diamond level program, this is a lot like the whale product, but without the wait and hold patient mentality. This one wants to constantly be generating income on the super popular companies like Microsoft, Apple, Facebook, Intel, Cisco, Comcast, Bank of America, Wells Fargo. It's the best performing portfolio this year outside of the cryptocurrencies and has done it with in the money covered calls the entire time. So we've been playing it safe. We've had protection to the downside while generating our return, and it's sitting very pretty this week. Next Tuesday we will cover these positions and do it all over again. But you can see our strike prices are all way below the current trading price. That's what we want to see. We want to be able to go into an option contract where we have downside protection, plus if the market goes higher, we generate a profit. And that's when we have a major threat looming ahead of us, which is the trade war. Now, if everything was coast is clear, we'd be writing the out of the money covered call and be taking on more risk right now. But that's just not the situation we're in. So I don't want to mislead people and make them think that the coast is clear, even though if you looked at the SPY chart, you just might think everything was all right. Let's take a look at the news overnight, and then we'll get this trade alert out and prepare for the webinar. Okay, I'm going to flip through the screenshots that I published overnight. Here's a look at the Whale Club. These are the positions that are potentially held in the Whale Club membership. And again, we're not going to touch the Google, Microsoft, Amazon, Apple, etc. until after a VIX run up above 40. So that'll be during a major crash. We're going to be jumping in where everyone is scared, and we're going to be selling deep in the money covered calls against those positions until volatility goes lower. Once volatility has crashed back down, then we'll move that covered call up above the trading price. And this portfolio has a lot of upside to it by being patient. So in the meanwhile, it's all in on the TLT. There is at least a few more months to ride this position out, if not much longer, depending on how long this trade war develops. At some point, I believe we'll be ending up in a large position in the TBT. So first, I am predicting the TLT will travel much higher due to the trade war slowing down global GDP. That should cause a stock crash. That's when we'll jump back into stocks. And this will be the same period where the QE5 is really pushing up assets again. And then after we get a rebound in stocks and they get expensive again, that's when I believe people are going to start realizing the debt America has piled up is not easy to keep up with the interest rates as time goes on, and all the pending obligations we have, as well as the demographic nightmare of too many old people and too few young, is going to push us towards this TBT. So I think as we watch rates bottom out finally in the next several months, maybe a year or two, we'll see a long-term reversal of rising rates, and so that'll make a very nice place. So to summarize, whale program is long TLT until a stock crash. At that point, we will rotate into the heavy hitters within the money covered calls. Once those get back to normal valuations, we will bet on rising rates. So TLT, then stocks, then the TBT. Here's a little tweet. According to the U.S. Treasury Department Office of Debt Management, the U.S. government is just 5 years away from the point of no return when every single dollar the government borrows will go towards funding interest payments on the national debt. So this is what we're looking for to eventually rotate into that TBT, but we are a ways out. This is from Bloomberg. Everything coming up treasuries between signs of a global slowdown, concerns of a trade war, and political tensions in Europe. Yields on U.S. government bonds have been tumbling, which makes TLT go up. Yesterday, I half joked that we should publish a story arguing that fears of China dumping its treasuries were helping to fuel the rally. Except it's really not a joke. People have this vision of China holding America over a barrel because the country buys so much of its government debt, and that if it were to sell, interest rates would soar and the U.S. economy would be toast. But it wouldn't work out this way. Long-term Treasury yields are a function of expected Fed policy over time, and the later is driven by inflation and growth dynamics. So unless the Chinese Treasury selling had an impact on U.S. inflation and growth, there's no particular reason to think the price would meaningfully change. What's more plausible than spiking yields is that if the word got out that China really did want to dump U.S. debt in size, yields would fall because people would assume that this nuclear option represented a gigantic break in the U.S.-Sino relationship. All that would hurt the global economy, causing the Fed to be even slower with expected rate hikes. In the immediate term, there would likely be a flight to treasuries amid a big risk-off move in markets. So that's exactly what we're expecting. Other news related to the Whale Club. Warren Buffett's Berkshire Hathaway put in almost $1 billion into Amazon. So now Buffett is basically just built the SPY in his Berkshire, just like we have in our portfolios. Very interesting. Of course, he doesn't have Google or Microsoft in there. For those of you who are in the Diamond Club, here's a look at our open positions. And I threw Uber in there just as a kind of like a canary in the coal mine. IPO'd at 45. If this thing is tanking, that's bad news for somewhat signaling potentially the top of this expansion. So it is hanging in there. We'll see how it performs. And meanwhile, the rest of these are performing like blockbusters, especially Cisco, up 5%. Okay, now look over at the basic member, the content we've posted to our intraday chat. SPY is skyrocketing higher. All the automated trading systems are shorting the VIX and pushing it back higher. But under the surface, things between China and US are deteriorating. Here we have a tweet. The long view is a guy who used to work for Bridgewater, Ray Dalio's big fund, largest hedge fund in the world. Great guy in terms of content. But we got the Iranians selling oil to the Chinese, which, of course, America's trying to stop them from selling any oil right now. Lance Roberts has always got the doom and gloom out there for you, and I take his notes with a grain of salt. But this just points out just how nasty some of the corrections have been in the past and how this can really slow down returns. If you lose 50%, you need 100% gain to make it back. And so this is just pointing out that we've had quite a few crashes over the last century that were of the magnitude of 50%. So that's basically 7 such events, or about once every 20 years. I mean, 15 years, sorry. So the thing is, the rebounds are always much larger, but if you get caught during those crashes, you can spend a long time to get back to even. That's what this chart illustrates here. So if you were invested in 1929, you had 30 years to get back in if you were buying near the top. If you were in the 60s and going into the Cold War, as well as a lot of government spending to try to create equality between the top and the bottom, you had a 23-year to get back to even. And if you go back all the way to the early 1900s, another 26-year period. So it just goes to show, while sure, we might have a few more years of upside ahead if things don't get blown out of proportion between the Chinese and Americans. If they do escalate, we could have decades of negative returns. So that's why it's important to know how to hedge your portfolio and to profit if the market goes sideways or down. Because we can see just in this period of time, actually there's a lot more time where it's going flat or down than there is times it goes up. And when it does go up, it happens very quickly and unexpectedly. Australia is a big trading partner with China, so it's something important to look at. We're looking for weakness happening abroad to signal perhaps the Chinese will have to cave in. And that'd be good, because then we can make some sort of trade pact and get past this. But right now, unemployment has climbed to 5.2% in Australia. Meanwhile, there is still price growth in the Chinese real estate market. This is the biggest headline. Huawei is the target of this big fight with their 5G network. We have basically the daughter of the owner of Huawei being held hostage in Canada. Meanwhile, 2 Canadians are now on death row in China for espionage. And so I believe this will be a fight that continues to escalate. And part of the problem for Huawei is that a lot of their parts are coming out of America. So this could be a bigger deal for them than us just blocking them from selling products in America. Emerging markets saw $1 billion of outflows. Chinese equities also saw $1.5 billion of outflows. And we're basically seeing everyone just bring their money home and invest in their own country. Same thing is happening in U.S. Treasury market. All the foreign investors are dropping like flies, but yet rates are going lower and lower, and that's because people in America, especially the rich, are loading up on treasuries right now. Here's the info about the Huawei and the 2 Canadians who are now facing the death penalty. And any rumors that Trump and Xi would meet are resolved. That is not true. I like to keep a look at oil, sitting right there at 70. Gold has not been enjoying the rally that Bitcoin has, but it's a much bigger asset class. And so perhaps it had its move much before cryptocurrencies, and now the small cap crypto is catching up. A lot of people have been pointing about how low the lumber market is in the commodities, because we're now back to 2014 levels in terms of lumber prices, which in general is showing a slowdown. And this chart is obviously a lot scarier and points to perhaps more downside. And the government bond market's just absolutely insane. The only place to get any yield is the U.S. Treasury. If we look at the German bonds, the Japanese bonds, they're in negative territory. And then we go look at the Hong Kong bond, which is a proxy into China, sitting at 1.6. So we have the strongest currency here stateside. And we can see these bond yields keep crashing lower, which is, of course, bullish for the TLT. And here's the big chart to really pay attention to, especially if you're a cryptocurrency investor, is this USD CNH exchange. And so in order to help keep the prices lower for American importers from China, they are making their currency cheaper, which makes the products cheaper, makes it easier for Americans to afford these prices when they have to throw on this huge tax on top as it arrives. And so this is, of course, not something anybody who owns a lot of the CNH is going to like, so they're dumping it and buying what they can, cryptocurrencies. So I think this will be the best signal to know when to take profits on the crypto world once we see this get to an extreme level, which it already is getting close to that. I think if it breaches 7, it'll be time to take some major profits in that Bitcoin portfolio. Here's a look at it overnight. Some selling off this morning. It's closer to 8,000 on Bitcoin now. Our portfolio is only trading Bitcoin, Ethereum, Bitcoin Cash, and Litecoin right now, which you can hold in the Robinhood app and have it insured, so you don't have to worry about your coins getting lost or anything of that nature. Now, there are some other great coins which I think Robinhood will add, and I also really like the Binance coin because it's more like owning a dividend stock than trying to bet on cryptocurrencies necessarily. But so these are some of the coins we do plan to add into the future in our portfolio, but not yet. Just a comparison of the S&P 500 futures market and the S&P 500 market. This Hu Jing fellow seems to be the spokesperson that gets retweeted a lot to represent the Chinese viewpoint. Most Chinese agree that the U.S. is more powerful than China, and Washington holds initiative in the trade war, but we just don't want to cave in, and we believe there's no way the U.S. can crush China. We are willing to bear some pain to give the U.S. a lesson. Meanwhile, Ethereum's up 60% in the past week. Yuan talks, China's holdings of U.S. Treasuries fell in March for the first time, but it's still sitting right around that $1 trillion mark. Now, inflation, especially from wages, would be very negative for the stock market. Number one, it would help reduce the profit margins of these companies. Two, it will create inflationary pressures to cause the Fed to raise rates. So we always want to keep track of minimum wages in large corporations and the trend. So we've seen Amazon, Bank of America, pretty much everybody pushing towards higher and higher minimum wages. So this is a slow thing to watch. Steve Bannon come out with some interviews on Bloomberg that were very, well, in their own words, vehemently vilifying China and inciting his country to confront China. So he's basically talking about how the Chinese are stealing our technology and creating their own rip-off version of it and selling it, and how they're quickly becoming a bigger power than the United States. Also talking about the lack of humanitarian rights in China. Industrial production, another little negative bump, but in the grand scheme of things, still growing. Factory output is slowed down. So we're at the point where everything is still positive in American data points, which is most likely why we haven't seen a big fear in the markets yet. But if this escalates and draws itself out, I don't think this will remain the case. And so we can see almost everybody is pulling out of the foreign investments and going to localized investments. So we can just see foreign holdings dropping as stocks have their best year ever. And here's the big chart, global trade year over year. It is plummeting. And again, if things continue to escalate, tariffs rise, expect this to go much lower. Stock crashes are caused by panics. So we are playing it very defensive right now, expecting a panic at any time. Now, if you do go to our Telegram group chat and join it, there's some YouTube videos I share. So Xi Jinping has quite an interesting story. His father was pretty high up in the political sphere, and they were ostracized. He was just basically a pig farmer and eventually worked his way up the political chain towards becoming a president. And then 5 years into his presidency, had the Congress change the law so that he can become the president for life. Right as he became president, he also put about 1.5 million people in jail who were all of his competition. So I guess it's pretty cutthroat and ruthless. So there's some good videos here on his history. If you listen to his speech, I also listened to his speech, which was given yesterday. And while you have a very brash real estate Mongol Donald Trump, this guy is the exact opposite. He is a very cool, collected, he talks about Karl Marx, he talks about all sorts of philosophy books, talks about space-time of all things, and now, of course, I'm listening to a translation. But the big thing was that his big reading between the lines in his speech yesterday was essentially that the Asian communities have 1/3 of the landmass and 2/3 of the population. They need to work together, and basically saying that we should take what's working for America and implement it into our culture, and not have them try to change our culture. So he's basically saying they're not going to budge on this issues with the U.S. And if you've ever watched any kung fu movies, they'll get the praying mantises to fight and study how they fight. Well, they did it brilliantly. They sat there and pretended like they're going to work with us for years with Trump, and then right at the pinnacle moment, threw out the "just kidding" line. So I'm now in the camp that I don't think they're going to do anything unless there is serious pain. And I think if he was to show weakness, that his own party would cannibalize him. So I'm studying this as much as I can in my spare time, as well as comparisons to the Cold War and things that were happening in the 60s. So that's what we're looking at in that video. The author of The Black Swan, Nassim Taleb, one of my favorite authors. He's all about how probabilities and statistics can be inaccurate and that the improbable does happen. And so he's basically just advocating to know how to hedge yourself. So our portfolios are very hedged, and I would argue that we know how to do that very well, but he's saying to stay out of the stock market unless you're an expert trader. Good interview on Bloomberg with him. Didn't want to comment on the Chinese because he hasn't studied it for 20 years, so interesting. He's a very smart guy. Got a few more analysis on one, Buffett buying Amazon. Is this a signal that we're in for a new big boom? Buffett would argue yes if rates stay low, and right now things do appear that rates will stay low. We've got some more analysis on the trade war, whether it will come to some sort of resolution. The executive order targeting Huawei, that's big news. And so that is a wrap. To recap, we are holding our SPY position, which sold that 280 strike, so it's now sitting at the maximum gain. If you get assigned, we made $69 a contract. We have that fear of missing out. Sure, they made a lot more money holding the SPY, but if you look at it, it's just been bouncing around nowhere. We're giving ourselves a situation to have a guaranteed profit with a lot of protection and very little chance to show any bleeding. So it makes us bulletproof. Crypto portfolio, this was our more advanced version of it. This one's up even more. It's just we haven't updated it yet. We found that was too hard to follow, too advanced for most folks in our program, so we've simplified it. These are the core positions you can buy at Robinhood. We're holding this position for a bit longer. I think this will run up even more extraordinarily before another big crash, so we will be trying to time when to take the profits. We'll start off by moving into cash and then eventually go completely out of Bitcoin and into a smaller short Bitcoin position. So I'll teach you guys how to do that when the time comes. It's very easy with one little website. In our diamond program, you're sitting pretty, nothing to worry about. All you got to know is we're protected to our strikes. If the market goes higher, we win. If the market goes flat, we win. If the market trades above our strike prices but goes down, we win. It's just that simple. So we have a nice cushion. And in our whale program, profits keep pouring in on this one. Very easy, boring return. We've got a lot of people who want to speculate on the bond market and how low rates will go. So we're continuing to play this position with the covered call. So we got a webinar in about an hour and a half. So I hope you can make that. Tomorrow we'll do our basic alert, and then Monday another basic alert. So thank you everyone for your time, and looking forward to a new update tomorrow.